The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw Minneapolis spring wheat find some strength on the day Thursday. A little bit of green in soybeans and bean oil, while corn and the other wheats were a mixed to lower day. Cattle under some pressure, maybe some consolidation trade ahead of the cattle on feed report. Overall, just it felt like a kind of a quiet day on Thursday. Plenty to catch up on, though, and talk about here in these markets. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to have you back on with us here this week. Thanks for joining us.
You bet.
Fairly quiet day Thursday. It's been a volatile week, though, obviously. So that is something to think about and consider here. Just, the start of the week with the big drops in these grain markets in particular. The bearish trend felt like it's continued to some degree, but we've kind of maybe tried to level it off here towards the end of the week, Brian.
Well, trying. Corn didn't have a very good day today. Now it had a couple of days in a row up, and it last Friday, I'll remind myself and remind everyone that we had a USDA report out, and it did have a favorable tone for corn. It was a little bit surprisingly friendly, a little bit of increase in usage and a little bit of decrease in carry. And anyway, bottom line was had a nice bullish key reversal on daily charts, maybe trying to scratch out a low, come in on Monday. The markets wasted little time on the overnight trade, just, I'm going to say, torpedoing. Then corn rallied back the last couple of days, now off today. So consolidation is the word I'd use, but a weak finish today. Good weather in the forecast. There's just no way to beat around the bush for the central Midwest. It's been a year. The most critical months for weather are, I think, I always say the rubber hits the road June 15th through about August 15th. And since early June, we've had one really good stretch of forecasts after another. The ones I pay most attention to are the 6 to 10 day. They're pretty accurate. You can look out and see what you expect the next week. And we've had some pretty good forecasts that I think a lot of the managed money probably sell when they should show above average rain in the forecast or below normal temperatures. And that's what you've got here in the marketplace now. You've got this situation where you've got a 6 to 10 day forecast that just takes you right to the end of July, and it's good for corn and beans. It just is. So I didn't mean to ramble there, but you've got good weather and a downtrend, and it seems like the markets are trying to hang on, but they sure don't have much bullish news right now.
Well, and something I think is maybe a little interesting here. We can talk about this, and you brought up the managed money. It just feels like funds are driving this bus right now. They're the bears here in this market. And I think about that USDA report from last Friday, a friendly surprise to corn, yet the corn market didn't really rally as much as we might have expected it to on a number like that. And then here on Thursday, soybeans, a little bit of green. We got a pretty big soybean sale on the daily wire to unknown, a little over 500,000 metric tons, but the bean market didn't really rally off that news either. So it almost feels like that just the funds, this bearishness, have so much control over this market that even when we get a little bit of good news in corn or beans, we're not taking advantage of it like we think we should.
Right. So in more, let's say, less bearish times, that kind of news would really give a spark to the market. You'd expect at least some good positive reaction to it, and we're not seeing that. So what's happening here? What's happening is, I think, I write a article every week, and last week I wrote it's all weather from here on out. So almost regardless of what you might look at as export sales or something elsewhere in the world, what is so important and key to the marketplace right now, where I think the focus is what does the weather look like? And I think weather just overran this morning. You've got this nice export sale number. Beans clawed back from negative territory, but they didn't go anywhere with it. And that's just the reality of a bear market, ample supplies. We need something more out of the ordinary. I'm not dispelling today's good number, but we're behind on export sales. So we're okay. We had a little bit of a catch up here, but we're not seeing a huge abrupt change. We're not seeing announcements. We're not seeing, China say we're going to, when I say an announcement, China come in and say, well, we're going to buy X. We just don't have any of that right now. So to me, the overriding factor is the bearish tone. The trend is down. The funds are short. They're adding to shorts. When the market rallies, they sell more. And I think they sell more in a good weather forecast. And I don't want to make it sound too simple, but it really almost appears to be that simple. When you've got good weather and big crops coming, or the potential for big crops, this is what happens. You don't respond to positive news.
I'm thinking about this too, Brian, and we can maybe get into this part of the discussion a little bit. It feels like, and I talked with a lot of corn growers this week in D.C. for Corn Congress, and I heard kind of time and time again the same thing was said to me in slightly different ways, but a lot of farmers are feeling like they're entering one of those time periods where it's a do what you gotta do time period in terms of your marketing. And some folks talking about how, we're going to get through this if we're a savvy marketer and we work with our end users, so to speak, and take advantage of some regional basis pops here and there, especially, if you're hanging on to any old crop at this point, or, even thinking new crops. So, that thought of being a savvy marketer and doing what you need to do in this window. I mean, what are your thoughts on some of that, thought process here from farmers?
Great observation. And my thought process is that if farmers are like anybody else, they run a business and they wear a couple of hats. They're producers and they're marketers. They market their inventory, so they're inventory managers. Unfortunately, it's an industry where, and like anywhere else, unless you're really starting to feel the pinch and the pain, you're not as sharp, right? You got to be sharp, or the theory is be sharp all year round, be paying attention to the market. So what we had is a couple of years ago, this big bull market. You and I talked about this theoretically before, but in reality, I know it happened because I talked to lots and lots of farmers. $6 corn wasn't as good as seven, so you don't sell $6 corn. $5 corn isn't as good as six, but and on and on. You got to step back and look at this big picture and say, well, is the world inventory likely growing or is it shrinking? Now I know we all can look back with hindsight and say, well, we dodged a lot of bullets here this spring and we haven't had a drought this summer. But that's how you got to plan for those what if scenarios. What if we have good conditions? You can't wait for the good conditions to come around and then decide, boy, I need to sharpen my tool. And then now I'm going to talk to the elevator and now I'm going to try and get a basis push. But that's a little browbeating, but where we are, it's not a very good price. So what do, right? Do we go at this and try and look for every opportunity to pick up a nickel at a time? I think so. I think we have to look at it from that perspective. We got this big competitor in South America that's not going away. And in fact, they're going to get bigger. So we've got to figure this out, how to be more proactive and look ahead. As an example, I'm not saying this is a great price for wheat, but I'm looking at next July wheat at $6 a bushel. Not a bad starting point just about in any year. So look forward thinking, looking ahead. And soybeans, get started early. Corn gets started early. The old saying is hope your first sales are your worst sales. But I find when people start early and start taking action, they pay more attention than if they just say, well, we'll just wait and see what spring brings, or we'll wait for that summer rally. If it doesn't come, it gets real painful. So didn't mean to be so wordy, but we're kind of stuck in a quandary right here. There aren't any easy answers down here.
No, and it's tough conversations. And I know I heard from some folks that they've taken advantage of some push bids. They have a good relationship with their end user, and they maybe, a lot of these end users know who's holding, old crop stocks right now, who's got to clean out the bin, things like that. Or, some folks thinking about that new crop and taking advantage here, they're taking advantage of some of those push bids out there. So, it kind of comes back to that thought and things you're talking about. If you can pick up a nickel or a dime here, if you need to, it's kind of how you got to manage this risk right now. It feels like, Brian.
Well, in particular, if you're, kind of really behind. And so this isn't judgment if you're on behind. I don't want to imply that. It hasn't been an easy year. I mean, the best price all year was January 2nd on a gap lower, and the market hasn't looked back. And then you've got people like me saying, well, historically, the market takes out that January high over the last 34 years, 32 of the last 34, it's taken it out. Well, maybe it still will, but we've been on this slippery slope for some time. We haven't had a weather event anywhere in the world of consequence to really kind of sink, I mean, that you could imagine just sinking your teeth into a weather market. That's not happened. And so bull markets have long tails. These lower prices, as we saw from the USDA, part of what we saw was on the 12th, we saw them increase demand. And there's an old economic formula: the lower the price, the higher the quantity of demand. And it makes sense from a long-term perspective. But yeah, we're kind of fighting right now for nickels and dimes. A lot of people are worried. They're starting to read things. Now, boy, the crop's getting so big now. Can it go lower? I would argue the market can always go lower, but it does look like it is trying to, consolidate. It seems like it could be running out of gas to the downside on corn. Beans still hit a new low today. Corn's close to a new low, so we're not arguing a low is in. But if you're behind on sales, I'd certainly look at the carry in the market. That's another tool. Look at the carry. What can you do out to March or May if you know you're going to store? Can you defend that? Can you sell call premium and pick up some good value if in fact the market just never rallies? And if it does, can you accept the hedge at a higher level and collect the premiums? So those are all things in the toolbox that we'll look at every day, and farmers should look at every day and just be versed in it, know when to move in and out.
We're talking today with Brian Doherty from Total Farm Marketing here on Market Talk. Let's go to livestock, Brian. Cattle, kind of a down day Thursday. I'm just wondering, I'm getting the feeling anyway that that's some positioning ahead of cattle on feed, probably to some degree. I know cash has been, we got some southern trade. We're still waiting on some northern trade this week, things like that. So just feels like that cattle market overall, plus maybe a down day in the stock market, adding in there too. Just felt like a combo of factors in cattle on Thursday, Brian.
Yeah, so let's start with what you the ladder here, the stock market. Big turnaround here, big push higher, now big turnaround. So yeah, we've always kind of said when markets sort of accelerate toward the top or bottom, or when they move toward the top or bottom, often they'll accelerate. In the stock Dow Jones, this accelerated recently. So all of a sudden, big reversal today. S&P down for a couple of days in a row. That may have had something to do with it. I still think the underlying issue is just sticky inflation. Consumers have their dollars stretched, and we're past the 4th of July holiday now. So, we had the Memorial Day, and then we had the Juneteenth day in there. So another day where people may have been, if they're off work, grilling, things like that, 4th of July. So expectations have been for cash to come down. It didn't drop as quickly, so the August board moved up some here lately. But all of a sudden, we think that cash, and I like to say it's well supported on the supply side, but I'm not so sure it is. And the board has been way ahead of cash for a while, and there's been a lot of kind of consternation that cash, or the board's out of sync with cash. But you got to remember, the August board is the expected price of cash in August, not in early July. And it looks like, we're talking, 188 some areas cash. The board's not that far, but it was down today, and it looks like hedge pressure to me, or a little profit taking, or both. But it looks like hedge pressure to me. I think the producers, part of this is weather forecast. Cooler than normal temperatures. That's great for weight gain in midsummer. You always worry about this searing hot and weight loss. I don't think there's going to be any weight loss. I think it looks really good. Talk to farmers and ranchers, and this weather is really good.
Well, I think too, we've seen this now for really most of the year. It feels like in futures here in both fat cattle and feeders, we get up to some of these price levels, and we struggle every time we get to some of these price levels as well, like a 265, 270 in feeders, or 185, 190 in fat cattle. It just feels like time and time again, we get up to some of these levels and we fail at these levels. Like that's the market trying to say this is the top, and no matter how many times we go up beat against it, we're not going to go through this. It is what it seems like to me, Brian.
Well, let me comment on that, because it not only seems like it is what it is. It just, you can look. I can look at this August contract, and in good gravy, where we're trading today, this is the same price we were trading in January. And we've been a little bit higher, we've been lower. But I think what happened in the cattle complex is we got a real kind of historical test of where demand just doesn't fall in place. And that was last fall. And you're pushing $200 on the board at your upper 190s on the deferred contracts. And when the market tipped over, it was pretty brutal. It was about a $30 drop. So it was okay to be bullish until it wasn't, and then the drop was almost unforgiving, and then it bounced back. So I'm just thinking that there is a hesitancy right now to add to strength in the upper 180s because it just doesn't seem like the meat can move at that end through the supermarket. And we've had another, 6-8 months of, 4 or 5% inflation. The dollar isn't going as far. It's just the way it is. Uh, I was hopeful that the way August cattle moved about 10 days ago and got up over 188, we might make a surge. But boy, it's been a disappointment from that perspective. It's still a good price. I think producers should still think about how do I defend this in case, and they're not even black swan, but just things start lower and they just don't come back. Demand just kind of fades away. I do that with put options, and if you're willing to pay some margin on an upswing in price, I would buy a put, and then I would sell a call to help finance that put. That's called a fence.
How about hogs? We've had some good technical trade this week. It's felt like a little mixed Thursday, but your thoughts there, and then the dairy markets too, Brian. Any thoughts in some of those sectors for us?
Yeah, so let's start with dairy because they had a good jump today. So, trading right now about 10 to almost 40 higher. They've been very back and forth lately. They've kind of lived and died by the way cheese moves. But there too, you've got a market that seemingly has kind of run out of gas at the upper levels. I say that with, a really nice move in October 2091 today, new contract high there. And a couple of weeks ago, that was down around 1980. So nice to see that market there has kind of pushed. Same story in the dairy that we've talked about all along is that we know we have a limited supply, but we also didn't think that the herd contracted enough. And the problem that you have from a long-term perspective is right now it looks like corn is readily available and it'll be readily available at a relatively low price. I don't think there's any dairy out there worried about $5 and $6 or $7 corn right now. So I think the herd will grow. The cheese is kind of the leader. You take the blocks and the barrels, add them together, you're right around 19, times that by 10, and in theory, that's about where the futures market should be. And a lot of the contracts do have a 18, 19, or 20 in front of them. So this is where I think the market should be. I don't see any, maybe in the Southwest, but any cow comfort type weather that could have impact. But the producers they've gotten really good over the last decade of creating less stress. We've talked about this before. These big facilities have wonderful airflow. They know how to kind of keep the cows cool. Not like when, I'm going to age myself, when back in the 70s and 80s, you walk in a barn and it is stifling hot and flies and it's just, and you just know the cows aren't performing as well. So,
Yeah.
maybe in the 90s too. So big fans will certainly help, but so I don't think that's a big problem right now. So I think weather really exasperating the milk supply, but certainly something to be watched is on the next production report whether or not the producers are actually edging the herd back up.
Very true. Very true. Brian, final thoughts for us here as we wrap it up today. Anything else you want to add?
I'd say just stay vigilant, look for opportunity. When the market bounces, watch it carefully. None of the bounces have moved anything more than a bounce this year. So we're still looking at very good crops. I'm talking to producers in Illinois, Indiana, Iowa, southern Iowa, in particular, southern half, 2/3 of Iowa, southern Wisconsin, Michigan. They've just got some really special looking crops. They've gotten 6 to 8 weeks of really good weather and timely rain. So be vigilant, work the phones, call about those bases. Don't wait for the phone to ring. Call, get on the list. I've had a few guys tell me, one talked to his elevator and they were giving him like 16 over, and he said I was hoping for 20 over, and the guy came right back and gave him 20 over. So they wanted to secure some corners, a little bit of a deficit area, but they worked the phones, and he made some of his own luck there. So just stay at it, stay vigilant. Look at every risk tool as a tool that might be necessary for you, and see if it is, and ask people like myself or people who are knowledgeable, and get good advice.
Well, if people want some of that good advice, they want to talk with you, I know a couple ways to get in touch. How can they reach you, Brian?
They can reach me through a simple phone call, 800-334-9779. Brian with a Y, so Brian at totalfarmmarketing.com. Shoot me an email. Those are probably the two easiest ways. And then we also have a great website, totalfarmmarketing.com. Take a look at our resources there. I've got some publications on there on options and inventory management. Look those up, or give me a call and we'll get those out to you.
Brian Doherty with Total Farm Marketing. Always a great conversation with you, sir. Have an awesome weekend. We will talk to you again next week.
Jesse, thank you. Good luck to everyone.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.